All right. Hi, folks. My name is Ramos. I am an associate client executive at Marsh USA. Marsh is an insurance broker based actually in New York, but our offices are in Los Angeles, and that's where I am based in. I have been part of Marsh for a little over 3 years now, and I've been based in the Los Angeles office for the duration of my employment. I started off at Marsh as an intern out of college. I actually graduated from Catholic Fullerton here in Orange County, and I did about 10 weeks of an internship at Marsh, and then shortly after I got a full-time position in their international department. I spent about a year and a half there. It was actually part of a rotational program where you spend a year in one department and then rotate over into another practice in Marsh. So I started off in Marsh's multinational department and then ended up in global risk management for the duration of my orientation and training. And after that, I off-boarded into a permanent position as an associate client executive. And that was the same work that I was doing in the global risk management department, which was my second rotation. And then now I am in the client management group. And Marsh is structured in a very particular way where there is advising on one side of the company and there is client management and placement. And I work a little bit closer to the clients. And Andrew will touch on what Oliver and Wyman Group does, which is a sister company of Marsh and McLennan.
Cool.
So I started at Marsh, a little over 3 years ago, and it's been great, and it's been a great company. So I'll let Andrew touch base and share his little story.
Awesome. Thanks, Israel. So my name is Andrew Duhancioglu, and I also work out of the Los Angeles office for Marsh & McLennan. My company is actually Oliver Wyman, which, as Israel mentioned, was a sister company of Marsh's. And what we do there is, we quantify insurance risks. So my official position there is an actuary, and what we do is pretty much the math behind a lot of insurance, and we try to capture risk and explain that may entail to clients and maybe to our fellow colleagues at Marsh. So to get there, I studied math at CSUN, and then my first job out of college was actually at Farmers Insurance, but I decided that I needed to, work more with a bunch of clients as opposed to one employer. So I decided to make a switch to Oliver Wyman, and I think I've really enjoyed my time working there, and it's been close to 5 years now. So the way that I decided to pursue actuarial sciences, I was always good at math in high school and in elementary or whatnot, but what I had to, that I always thought that I would end up becoming a teacher, or maybe I would have to get a PhD and become a professor. So once I heard that there was a way that I could apply mathematical skills in a business environment, actuarial science was a very big appeal to me. So I decided to pursue that field. But whatever you want to pursue, I wasn't always good at math. It took a lot of practice, a lot of my parents getting mad at me and giving me tutors and all that. So whatever you do in life, as long as you're interested in it and you practice hard, that's the field that you should pursue. So once you guys are starting to decide that, if you might not feel that you're the best at a particular subject, but if you like it, you'll eventually get good at it. And I promise you that without all that training, I probably wouldn't be where I am today.
Yep, I totally agree with that comment. Thanks, Andrew. So what we're going to do today is touch about a little thing that me and Andrew actually work on together, which is the concept of insurance, right? So as Andrew said, he actually works on the actuarial side and brings more of a quantitative approach to insurance in order for clients to purchase the right type of insurance program. And as well, we'll go through right now, there's various types of insurance that clients purchase for a variety of different reasons, whether it be their business exposure, which essentially means what type of business they're in, and that insurance policy is going to be tailored or specifically placed for that type of business. And it doesn't also have to be on a business, it can be on the individual perspective. And personal lines insurance, it actually uses actuarial science which is what Andrew focuses on, in order to get the right numbers and come up with the rates that you guys eventually pay for insurance, right? And Andrew will touch on the specifics of that. And we're going to try to keep it high level as far as what the insurance actually is. So we'll go ahead and go into the details. So for those, and I'm sure you've already become familiar with it because a lot of you will be driving in a few years, so you know what an auto insurance policy is. But essentially, an insurance policy is a contract between you and an insurance company in which you pay a certain amount of money, and that money is termed as a premium to that company, okay? And what you get in return is the guarantee that in the event of a loss, right, and we term it as a loss, but essentially an accident or anything that really results into a financial consequence to you as a consumer, the insurance company is going to pay you for that amount. Now, the insurance company is going to pay the amount that you are essentially at a loss for, and it's important to know that because the insurance company is not going to pay you more than what they're obligated to pay. So if the insurance, so, you know, let's say the example of an auto policy where you guys will be purchasing soon, they're not going to pay more than what the car is valued at, right? Because that essentially will defeat the principle of you getting money for that car. If the car is worth $20,000, the insurance company is not going to pay more than that, right? So it's really good to keep that in the back of the mind because actuarial science, what Andrew does, kind of uses that theory and the science to come up with the right number that should be placed for what you're paying for insurance. So essentially it's a contract between you and the insurance company in which you give them money and they give you a guarantee to pay that back. So if you get in a car accident, right, the insurance company is going to pay you money to go and repair your car. Okay? Now there's the physical damage component of that and then also the liability component, which not to get too much into the details, but that essentially also covers you in the event that you hurt someone in a car accident and there is a liability on your behalf to pay for medical expenses for the other person in the car accident. The insurance company will pay that for as well. And so like I mentioned, there's different types of insurance and there's different types of coverages under one policy, like I just mentioned, under the auto policy where you have physical damage and you also have liability. So, you know, we kind of touched on a little of everything there. You know, the premium is essentially what you're paying for the insurance company. You know, once you have a claim or a loss, you report that to the insurance company in the event of a claim. Usually on the back of your insurance policy in your auto, you'll have that 1-800 number to report. And that's when you go ahead and file a claim informing the insurance company to pay, you know, certain damages or report. And sometimes it really comes down to an investigation process where the insurance company goes and actually does an appraisal of the loss to determine if it's the right amount, because you can be telling the insurance company, hey, I got in a car accident and it's worth $10,000, but really the damage was only $1,000, right? So there's sort of that behind the scenes process that happens when you file a claim. Now, what me and Andrew do, you know, I'm an insurance broker, so I represent clients, and I do it more on the commercial side, but there's insurance brokers that represent you as individual consumers to insurance carriers, right? So we help you get certain policies. We make sure that it's the right coverage, that you have the right limits, that you're paying the right premium, right? So you can get the best bang for your buck, essentially. Now, Andrew can touch a little about as what you do on the commercial side and maybe on the personal lines as well, and how you represent the folks in the insurance world.
Definitely. And then one thing that like I always asked myself when thinking about insurance when I first started out is, why even buy it? Why are people paying to get insurance? And the point of it is you get stability. So for that one rainy day, like Israel was mentioning, when you get into a car accident and maybe you lose your car, instead of paying $30,000, $20,000 to replace that car, you have insurance to take care of that for you. But in exchange for that stability, what you're doing is you're paying a premium or a cost so that for that one crazy day, you know, you're covered. And, you know, if you, for most people in this room, you know, if you go up to your parents and you ask them to total up all the premiums they paid and compare it to their losses for their automobile policy, I promise most of you will have more premiums than losses, and that's the way insurance policies are designed. And the point of that is insurance companies need to make a profit too. So within the premium, there's also a little bit of a profit margin so that insurance companies can stay alive and support those policies and continue to provide stability. In the long run, okay, what happens is insurance companies start pooling money together. And what happens there is they grab my premium, they grab Israel's premium, and they grab everyone's premium and they put it in a big pool. And once somebody has a claim, they draw out of that pool. But maybe Israel and I don't need to go into that pool, but somebody else needs to pay for an auto policy. And that's the basic structure of how insurance works. We combine all the money together and we pay out when someone needs it so that we avoid very big drops or very big events, and that, you know, we can live our lives normally instead of having to pay out $30,000 out of nowhere. So what we do on the personal lines and commercial lines side, and the way that I love to think about it is personal lines is stuff that you buy, insurance products you buy for you personally, like home insurance, auto insurance, it impacts you directly. Think about commercial lines more on the business side. Businesses usually need to buy commercial lines. So that's the way I like to think about it. And where we come in is we try to come up with the cost or the premiums that need to be charged to customers so that insurance companies can stay afloat, charge the right amount, and so, you know, the customers are covered and the insurance companies can survive. So that's one function of what an actuary can do. That's one of their tasks. So other tasks, you know, you could also look at different types of insurance programs and evaluate the risk of each type. But, you know, one of the most applicable applications in this example is just coming up with premium.
Okay, perfect. So as you can tell, there's obviously the relationship component of what we do, in which essentially I have, you know, the relationship with the client and working with them specifically, and Andrew does too, but Andrew really brings a quantitative approach in order for clients to determine how much it is that they're going to pay, or to forecast, right? So essentially predict what certain losses would be for companies, really. And it's really businesses that kind of benefit from this because they have such big exposure, right? Like a company that manufactures cell phones wants to know what is the probability, right, or the chances of me losing 1 million phones over the course of the next year, right? And that's very valuable to clients because they want to know that in order to determine how much insurance to purchase. Now, there's also another component to insurance, which is essentially a deductible. So for those who are not familiar with the deductible is a certain amount that the insurance company sets, okay, and establishes and say, we will give you insurance or essentially pay for anything above this amount, okay? So on insurance auto policy, we'll keep using that example. You may have a deductible of $5,000, right? So that means that the insurance company is not going to pay anything underneath $5,000. If you're in a car accident and you report a claim and that value of the claim is $2,000, the insurance company is not going to pay that. Now, there is certain deductibles in the sense that they'll pay for it up front and then you have to reimburse the company, but most of the time you have to keep in mind that you're essentially liable for that amount. Now, anything above that deductible amount is going to be something where the insurance company is responsible for. Now, it's important to know that because sometimes insurance companies have clients or commercial businesses have much larger deductibles, and those deductibles can be in the 100,000, 200,000, 300,000 levels, and that's very important because sometimes they don't know how much of a high deductible you want to have, because the higher the deductible, the lower you are paying in your premium. And the reason that is because the insurance company is not taking on that risk, right? So it's less risky for them to have a higher deductible because that's what you're paying, right? Or a business is paying out of pocket. So they say, well, anything that happens between that, that's on them and we don't have to pay that, right? So folks like Andrew actually have statistical analysis to say, well, these are going to be your losses within $100,000 deductible or a $200,000 deductible. So they actually not only help you determine how much in limits you have to purchase, right? So if you want to have $1 million policy covering, your auto or your business, they're actually able to determine how much deductibles or how high of a level deductible. And that's very interesting because it's actually forecasting and anticipating for the future. So it's a very unique concept that on the personal line that it is used, but more on the commercial side as well. And that's one of the things that what drew me to insurance, even though I'm not an actuary. It's that we can kind of tailor those solutions to clients and help them navigate those challenging, financial challenges that they have going forward. So, you as a consumer, whoever holds that policy, you are essentially a policy holder, right? So it's always important for you to know that, because the policy holders are usually the ones who are going to be paying those amounts for the deductibles within that level.
Yep.
So,
and I think, Israel, as an insurance broker, one of the things that helps us collaborate so well with you guys is, I feel like on your end, what you're doing is you're sort of investigating the client and going in and seeing like, okay, what risks are present, and what the actuaries do is once you guys bring the risks to us, we sit there and quantify it. So I like to think of brokers almost sort of like detectives in this situation, where they're just trying to see different ways that that a client could lose money. And for personal insurance, there isn't a whole lot. I mean, you have your medical insurance, you got your house, you got your auto. It's not that complex. But when you have a business, there's a whole different types of coverages that are available to you, and it really depends what kind of business you're in. We won't dive into that, but that's essentially the composition of commercial insurance. One other thing that I wanted to expand on is, Israel was mentioning, when you get a higher deductible, you pay a lower premium. The reason why the premium's lower is because the insurance company has to pay out less and you have to pay out more. And if you think about it like that, you're taking on more risk. So if you go up to your auto insurers and increase the deductibles, I'm not advising that you do, but if you increase the deductibles and perhaps even lower the limits, what will happen is the auto insurers will lower the policy, because then the policy will have less risk and less payout potential. So it all depends on an individual basis. Everyone I think has like a pretty uniform or like similar risk appetite, in the sense that the average person buying personal auto will not go and tweak their policies to have extra high deductibles and low limits. But when you start talking about businesses, every type of business has different risk appetite. Perhaps perhaps one big company wants to retain $1 million in loss, and perhaps your small mom and pop shop only wants to retain $10,000 because that's all they can afford. The more you retain, the less you pay. So that's the way we like to look at it from our lens.
Absolutely. And, you guys may be running into, most of it personal line insurance, right? But if any of you entrepreneurs out there, which I'm sure we'll see you on Forbes 30 under 30 in a few years, you overachievers, and the fact that you guys are associated with junior achievement, I don't doubt that, So if in the event you guys go into businesses for yourself, you're gonna have to have property insurance, right? So let's say you want to open up your own shop and you want to open up, let's just say, for example, a barber shop, okay? And you go into business for yourself. You're gonna have to get some equipment, right? Probably some clippers, possibly some chairs, nice windows or reflectors and glasses for you to reflect for your clients. And you're gonna have to have insurance for that equipment. In order for it to cover it in case there's a fire. So you may be running into instances where you'll be asking yourself, how much is the right type of insurance that I should be purchasing for myself, right? How much deductibles will I be able to sustain? How much am I comfortable with? Like I said, Andrew alluded to a very good example where a large company can have $1 million deductibles, but someone who is owning a barbershop, for example, may not be able to have the cash on hand to have that deductible, right? So they'll settle for something that's a little bit less. So I think the point that we're trying to make is that even though insurance may just seem like it's sometimes you just hear about the auto policies, and that may be subject to what you think is going to be, you know, relatable to your life. I feel like insurance touches almost every part of the world, you know, and every type of the business. You really don't see it at the front end, but it's actually there because every business is obligated from a regulation standpoint to carry certain insurance. Now, if you go work for someone, you know, and I have this as well, and Andrew does too. Your employer is paying workers' compensation insurance. So in the event that you can't go to work one day, or that you get ill, and you get injured on the job, your payroll or your wages that you get paid on a weekly basis or semi-weekly basis, they're covered. So there's an insurance company that's going to pay your employer essentially your wages for you to continue to stay at home while you get better. So you know, there's insurance, everything going in the background, but it's very important for you to understand the concept of it, because not only will you be purchasing it yourself for your personal use, but maybe one day from a business standpoint. And even if you don't go into business, the chances of you working for someone or working for a company that has it is probably 99.9% because it's there. So hopefully this shedded some light on the insurance background, but I guess I'll just touch one little point about why I got into Marsh specifically. So I started my business back in college, and there was a lot of personal skills and sales skills that I used there that translated into Marsh. And what I like, just like Andrew alluded to, is putting a little bit of a detective hat on and working with clients to figure out exactly what it is that they need for their business operations. I have clients that, you know, manufacture technology. I have clients that have fleets of vessels, right? So ships. So we have to get certain marine policies to cover their exposures. I have clients that send up satellites into space. And there's insurance for that too, to cover the launches that go to rockets up into space. So it touches almost every aspect of the world, and that's what keeps it interesting, because I work with different industries as well. And the same with Andrew, right? He runs this quantitative analysis for those clients that need that, because they want to know, how much should my retention be for a satellite that's worth $20 million, right? So yeah, Andrew, is there anything else that you wanna add?
I just want to say that insurance is everywhere. So just from your barbershop example, you can just look anywhere in the barbershop and there's some form of insurance that needs to be in pretty much every product, and you know, in every situation you can have a customer slip, trip, and fall there, and the owner of the barbershop needs to pay for the medical bills and perhaps even the lost wages of the person that falls down. So there's risk everywhere. And the cool part about our jobs is we're you know, finding out the risk, working with different types of clients, and, you know, just trying to come up with a solution to protect our clients. Our number one goal is to be their trusted advisors and make sure they come to us and look to us as the experts in understanding and assessing insurance risk.
Yep, I agree. So if any of you have any questions as far as insurance, feel free to reach out to your local GA supervisors, and we'd be happy to give a little bit more detail on it. But hopefully this shed some light into insurance. And I know that some of you guys may be purchasing insurance auto policies because you'll be driving soon. So yeah, the best of luck to you, and we know that you're in good hands with Junior Achievement.